What's going on, guys? Alex here, and today I want to talk about an income tax concept known as the step up in basis. Now, this is something that confounds a lot of taxpayers out there, and I think once you get the concept of how it works and what the idea behind it is, it'll become a lot simpler for you to understand. So, before we dive into the step up in basis, first we're going to try to understand what basis is all about, and then we're going to graduate to the step up in basis and get that figured out as well. So, as usual, I have for you a handy dandy spreadsheet, and that's what we're going to use to figure all of this out. All right, so if we start off with a blank slate here, let's just say, for example, that we have a taxpayer who purchases an asset. So let's get that all modeled out here. And let's say they purchased a home. All right, so the home is purchased on, let's say, January 1st, 2000. Nice round date there. Let's call this purchase date. And that's going to be important in a little bit, and you'll see why. Okay, so we talked about 1/1/2000. All right, now let's talk about the purchase price. Let's keep the round numbers happening, and let's call this 100,000. All right, and this is the purchase price. All right, so in terms of cost basis, that is the beginning point on which basis is going to be computed for us. And in many cases, let's say in the situation where you purchase a home, that initial cost basis, or that initial basis, is going to be that acquisition price. And this includes any real estate commissions, the purchase price itself of the home, and so forth. So that's going to begin our basis journey, if you will. Now, let's say that we get to a later date. So let's talk about 1/1/2020. All right. And let's say that the fair market value at this point, because there's been some appreciation, increases to 500,000. All right. So in this case, we could see that there's an appreciation amount of $400,000 between the initial cost and the fair market value. Now, if this taxpayer were to sell this home on this date, essentially, to begin the gain calculation, if you will, we would need to essentially start with the $500,000 sale price. Let's assume that's the sale price. And we'd have to then compare that to the original cost basis to figure out the tax implications. Now, there's certain tax benefits that apply to sales of primary residences and things like that, but we're not going to worry about that too much right now. But just keep in mind that that would be what we were basically comparing to figure out the income tax implications of this sale. Now, let's look at this at a bit of a more somber perspective. Let's say that it wasn't a sale that occurred on 1/1/2020, but instead it was a death. Okay, this video will probably be a little bit more fitting for Halloween, but you know, it's not that time of year. All right, so let's assume the same date. Okay, so the date of death now is going to be that 1/1/2020 date. Now, the fair market value is still 500,000, right? That shouldn't change. Now, here's the distinction where the step up in basis would come in. So when this individual dies on 1/1/2020, this fair market value on the date of death becomes the new basis for that property. Okay? So if the beneficiaries who received this property by way of a will, by way of a trust, what have you, if they were to sell this property on the very next day for $500,000, essentially the tax implications would be zero, being that the basis has been stepped up from this $600,000 cost basis to the fair market value on the date of death. So what does this mean? First of all, we'll notice that since the purchase date, there's been quite a bit of appreciation, right? So we had 500,000 minus the 100,000. That's 400,000 in appreciation in value. Now, the question becomes, who pays the taxes on this amount? And is this amount ever taxed? And the answer is no. The step up in value means that this appreciation that occurred between the time that the property was purchased, you add all the different basis adjustments into the mix, it doesn't really matter, because for the most part, when an individual passes away, they would receive the step up in basis in that property in most cases, and the appreciation in value is never taxed. All right, it's pretty significant benefit there in terms of the beneficiaries now having to carry on that property, because if they were to dispose of it, then the tax implications would be that much lower. So let's take a look at those in a bit more detail. So let's say you are the beneficiary, all right, and you inherited this property. Okay, we're just talking about a plain vanilla residence, and this would be on the same date, and you have basically your stepped up basis of the 500,000. Now, when an individual passes away, when a decedent passes away and that property is passed on to another beneficiary or a trust, what have you, the implications of selling that property are always going to be long-term in terms of the gain. All right, so if you go ahead and sell this property the very next day after the individual died, you put it up on the market, you sell it, typically you will have the sale price be very close to the adjusted stepped up basis. So in that case, there could be zero tax implications. There actually could be losses, because once you factor in selling costs and things like that, real estate commissions, you may be looking at a loss when all is said and done. But the important thing to consider is that it's long term. It doesn't matter if you sold it 10 minutes after they passed away. It's long-term capital gain or long-term capital loss. So you can see here that the step up in basis mitigates a huge amount of tax liability. And a common mistake that we see is that individuals who may have a medical condition, or they just reach an age where they feel they don't have too many years left, what they'll do is they'll gift their assets, they'll gift their appreciated assets to their next of kin. And this could be a huge mistake, because if you consider a situation where, let's say, somebody purchased a house for $10,000 back in 1902, and they just kept on living and living and living, and the property kept on appreciating and appreciating and appreciating. So 2020 rolls around, they're not feeling that great. They feel like they don't have much time left. The property is now worth $1.5 million. And to do a nice thing to their next of kin, they gift that property over to them. What happens in that situation is that $10,000 cost basis, let's forget all other adjustments for a second, would then transfer to that beneficiary, meaning that if they were to sell that property for $1.5 million right after they received this gift, they would be taxed on the difference between the $10,000 cost basis and the $1.5 million fair market value. Huge implications. That means that that gift basically precludes them from taking advantage of the step up in basis. A different strategy might be just to keep that property in the name of the individual who's soon to pass away or expected to pass away, take advantage of the step up in basis, and then have a much better tax outcome in many cases. So this is why it's important to plan around this step up, to keep it in mind, to know that it's out there so that you don't make a costly tax mistake, because once a gift is made one way, that person passes away, there's really no way to gift it back. And that can cause all sorts of other implications as well. So make sure you're aware of the step up in basis, because there's so many planning opportunities available, and unfortunately a lot of disasters that come out of this when proper planning is not done. And here's a caveat about the step up in basis. The application of it is limited to certain assets. All right. Now, we use the example of a home. That would be applicable, right? So if you have a home owned in the name of an individual, then the step up in basis should generally not be an issue. But if you have married couples, depending on how the property is titled, whether it gets a full step up in basis or half step up in basis, that can get very technical. So don't try to tackle this on your own. The numbers tend to be very big. So it would help to have a professional guide you through this process, because step up in basis, as simple as it may seem, can also get very complex very quickly. All right. So aside from that, also keep in mind that some assets are not subject to a step up in basis. So if grandma has an IRA account that you happen to inherit, that's not going to be subject to a step up. All right. So you're going to have to keep in mind that any distributions you take, if the IRA was funded with pre-tax amounts, is going to be taxable, right? So no step up in basis in that case. And similar things with 401ks, 403bs, 457 plans, and some employee incentive stock compensation programs. Those may have limited applicability when it comes to the step up in basis. So you want to be very careful. The more exotic the assets you're talking about, the more you have to dig in to ensure that A, the step up in basis is applicable. B, you get a full step up. Sometimes you don't get the full, sometimes there's a half. It depends on a lot of different factors. And C, you want to make sure that before you dispose of those assets, you're aware of the income tax implications, because proper knowledge means proper planning, and fixing things after the fact is usually not all that doable. And the options in that case may be limited. So that's a little bit of background on the step up in basis. Hopefully this helps shed some light on this kind of mysterious aspect of the tax law. But the thing you have to keep in mind is if you have assets that are titled to an individual, we're talking about plain vanilla assets, in general, they receive a step up in basis at death. And we're talking about a reset of the basis to the fair market value at that point. Now, keep in mind, it could be a step up in basis. It could be a step down in basis as well, which can be unfriendly depending on the situation. So keep that in mind. Know that if you have implications in this area, it will certainly behoove you to take a professional along with you, because they may make the ride a lot smoother. So hopefully this helps shed some light on basis, the step up in basis, and so forth. If you got value out of this video, feel free to comment, like, subscribe. I love reading the comments on this, all right? And keep tuned for more videos, because I'm only getting started, all right? Hopefully this was helpful. Thanks for watching.